Hello, everyone, and welcome to this Kpler webinar focused on OPEC Plus, which had a meeting over the past weekend. It's myself, I'm Humayun Fadakshahi, head of crude oil analysis here at Kpler, and my colleague Amina Bakr joining us from Dubai. So we're going to take you through the latest decision from OPEC Plus. We'll see what actually happened, what it means for the market, and also what's next, what's to expect. So before actually let's go straight into the topic. Amina, the floor is yours, and after that I'll be presenting a few slides. And also, I just wanted to remind you that you can use the Q&A function of Zoom, so don't hesitate to ask us questions. We'll be speaking for about 20-25 minutes before going into the Q&A session. Amina, the floor is yours.
Thank you, Humayun, and apologies again for the minor delay, technical issues. Good morning, good afternoon, good evening, wherever you are in the world, and thank you for joining us again on this webinar that we are now getting used to, Humayun. We're hosting it almost after every single OPEC meeting, or OPEC Plus, actually, call that happens between the 8 producers that are offering the voluntary cuts of 2.2 million barrels a day and have started to unwind these cuts starting in April. So this meeting, which basically took place on Saturday, I want to rewind a little bit and kind of in anticipation of this meeting and answering a question where, I mean, a lot of people are wondering today. OPEC 8 decided, or OPEC plus 8 decided to bring back 411,000 barrels for the month of July, but we saw oil prices rise today. So how come? What did that happen? So ahead of the meeting, and particularly, I mean, I'm talking about the couple of days ahead of the meeting, there were a lot of whispers in the market and talk that there's a possibility of an even bigger volume than the 411. And I believe in anticipation of that, a lot of trading happened, which we saw the sell-off of oil. And we're seeing a recovery today because the meeting really yielded the 411 and not a bigger amount. The meeting itself was 90 minutes. It was a bit longer, Humayun, than the usual. It's usually kind of faster. And the kind of sticking point or the standing point is that during the meeting, Russia proposed a pause to the increments. And the other country that also kind of supported this was Oman. But it wasn't a situation where they were sticking to that proposal. It was just in a matter of a kind of discussing what are the possibilities. And in the end, I mean, all the states managed to reach a level of consensus, and they agreed that the 411 for July makes sense. We've pointed it out many times that demand during the summer season, domestic demand in many of these OPEC states, and Humayun is going to show you how much demand there is in a moment, but it could help buffer some of that additional production. Moreover, you have the driving season in the US. We have Hajj season, which is starting this week in Saudi Arabia. So all of that are going to be helping in buffering those extra barrels. Moreover, I mean, just looking into what might happen, there are kind of a lot of expectations right now, and I've seen banknotes saying that we're going to see another 411 perhaps in August. That seems to be kind of the financial market, or a lot of bankers seem to go with that opinion. But reality is, I mean, the group still has the flexibility to pause, reverse, go back to a smaller increment, have a bigger increment. And they've stated this again in their communique. They laid it out very clearly that they have the flexibility to do this. The next meeting is due to happen on the 6th of July, and that's basically related to production policy for the month of August. And one of the biggest questions that we always get over and over again whenever the 8 states decide to go ahead with this unwinding is, what is the main motivation behind it? Why are they doing this right now? Aren't they worried about oil prices dipping lower? And is Saudi Arabia and the UAE comfortable with current prices? So comfortable with the current prices, I can tell you that no one is comfortable with the current prices, because if you look at break-even points for budgets, it doesn't make sense to have lower oil prices for any of the OPEC plus states. But it's also a time where the group needed to do something. They can't sit on their hands while seeing some of their members leak supply into the market in an unorderly fashion. So they needed to create a system which restores fairness to the ones that have been complying with their quotas, and also give the chance to those that have not been compliant, such as Russia, Kazakhstan, and Iraq, to accelerate their compensation. And the higher quotas they get also aid them in this accelerated compensation. Do we believe that, all of these compensated barrels are actually going to happen? No, I mean, Kazakhstan has not laid out a clear plan to inform even the international oil companies on the ground to cut production. So that's not necessarily the case. But it's only fair for the other members to be returning their barrels during this time. How things will play out, I mean, that kind of remains to be seen. And our current stance is that we factored in a pause for the month of August, but of course that could be reviewed in the coming days, and we'll be updating you about that. So with that, I will hand over to my colleague Humayun to go through some of our balances, our price forecasts, but also to tell you how compliance looks and what exports look like. Humayun, over to you.
Yeah, thanks, Amina. So yeah, very clear. It's been quite a relatively straightforward meeting, even though, as you said, some members finally are showing signs that they may not be willing to continue those increases anymore after, July. So the first thing to notice, as you said, Amina, is that prices have actually increased today, despite that decision to increase production by another 400,000 barrels per day. And one reasons behind this is, as you can see on the left chart, if you look at the seaborne exports from the group, the whole group, so this includes actually the exempt countries such as Iran, Venezuela, Libya, and Mexico. But if you look at full exports from the group, we've actually seen a decrease so far in May. And as you can see, compared to when production started to increase in April, we haven't seen any significant increase actually in terms of exports. So this really indicates that most of the production increase is being consumed domestically. And that's why actually we are seeing part of the reason why we are seeing prices rise today. I mean, there's other things happening in the market. There's also kind of failure around the Russia-Ukraine deal. There's potentially the Iran nuclear deal with the US also kind of becoming less likely. Apparently, Iran has given a negative answer so far. So there could be other reasons too. But it's fair to say that the OPEC Plus decision is also not that bearish, at least in the short term. So if we look at the production changes and what this means, what it means in terms of actual production on a month-by-month basis, if you look at the right chart, we are looking at the 8 countries that have been implementing those extra voluntary cuts of 2.2 million barrels per day. Really, the goal here is to get rid of that layer of extra voluntary cut. I mean, I'm sure you'll agree with that. And what we can see is that the actual increase is a bit less than what's on paper. So if you remember, in April we had a normal hike of 138 on paper. I mean, including the compensation plans, we have seen an increase in production of about 70 kbd. And you can see for the rest of the other 3 months, May, June, and July, we also see less than 411 kbd, which is actually the volume on paper that they should be bringing online. So despite this, it's still relatively large increase in terms of production. It's about 1 million barrels per day over the course of 3-4 months. And the question is, will happen after July. As Amina said earlier, our view is that because of balances being very long, it would make sense for the group to pause its production hikes. But I'm sure we'll get back into the Q&A to that specific point. It could also be that the group decides to continue those increases, maybe 400, such as May, June, July, or maybe a normal hike of 130 kbd. We'll see. But again, we think that after July, the balances get quite long, and so it would be risky for the group to continue that same strategy. So as we mentioned, in the short term, the outcome is actually not that not that bearish, sorry, for prices, because it is not resulting in a lot more volumes for export markets. So, for instance, if we look at Saudi Arabia's oil exports, that's what you can see here on the left in KBD. You can see that there has been a slight uptick up for the month of May. But it's really not something that is very significant if you compare that with the high level of production increases that they've had, more than 200,000 barrels per day. Well, the increase in exports in May has been much less than that, and if you compare to March, it's been relatively stable. One other reason why in the next few months we shouldn't see Saudi exports significantly rise is domestic demand. And part of domestic demand in Saudi Arabia is led by crude burn, especially in the summer month. And you can see that this year we still expect a very high level of crude burn domestically. So we expect it to at least match what we have seen last year in 2024. So rising to about above 800,000 barrels per day in July and August, up from levels under 500 kbd in May. So that will also mean that a lot of those volumes that will be increased in terms of production will actually stay domestically and will be even burnt directly to generate more power, as it is already getting quite hot in the region. And I'm sure, Amina, you can confirm that, being based in Dubai. If you look at the fiscal break-even price for specifically Saudi Arabia, I think we showed that in the previous webinar, but at the current level of exports, it's still very high. We estimate that it is right now around $92 per barrel for Brent. And that indicates, how right now we're almost $30 per barrel under that level. So it really indicates that it's a level that is very obviously relatively almost impossible to achieve right now in the current market conditions. And it's something that has been realized and accepted by the group, the wider group, and obviously by Saudi Arabia as well. The kingdom, by the way, has other means in the short term to raise cash if they want. They have quite a low debt to GDP ratio, so they can always use that in the short term in order to reach other financial goals that they have. One very important reason behind the OPEC Plus decision of increasing production over the past 2 months and over the next 2 months was really to reduce competitiveness from west of Suez producers. So we had a very high level of exports from the west of Suez to Asia at the beginning of the year, almost reaching 9 million barrels per day. But you see that the increase in production from OPEC Plus, so that's mainly coming from the Middle East, has been weighing on the Dubai price curve, on the Dubai contract. And that is being seen in the Brent Dubai EFS spread. That's what you can see on the right. You see the spread was almost trading at parity about 2 months ago, and now we're above $2 per barrel. So this is very important because it is making west of Suez crude, which are mainly priced off Brent, less competitive in Asia and for Asian refiners. And for instance, in April, we used to see more than 300,000 barrels per day of crude from Kazakhstan, CPC blend, going into Asia, and especially mainly to China. And in May, that level fell to zero. So it is starting to work. We are seeing levels from Latin America, from West Africa, from the US as well also come down, as you can see on the left chart. So the volumes coming from the west of Suez to Asia have fallen by more than 2 million barrels per day. And that's key, as you know, we are ahead of the summer season in Asia, to be able to make the most out of those buying activity from Asian refiners. Just to visualize a bit better that domestic demand increase within OPEC Plus, this is what you can see on the left chart. This shows you demand internally, both refinery runs and crude burn, and you can see that there is an increase of almost 1 million barrels per day between where we are now and the month of August. And most of that will take place in the region in the Middle East, 750 kbd, and the rest mainly in Russia, as refineries are coming back from maintenance. And again, that explains why the price action so far has not been really bearish, based on despite that increase in production, because the market understands that most of these barrels would be consumed domestically. I was saying earlier that if you go after the month of July and August, the situation changes dramatically. You can see on the left, OPEC Plus demand falls off a cliff as temperatures kind of normalize, and the need for power generation, especially in the Middle East, decreases. And you can see that on the right chart, actually. If you assume that OPEC Plus continues to increase production, and actually here we have assumed a freeze of those production hikes after the month of July, but you can see that we still assume some rise in production, with production not staying flat over the next 9 months. So with having production slightly increasing, you can see that the gap between where production is going to be and where domestic demand from OPEC Plus countries is going to be, on average, between the end of Q3 this year and the beginning of Q3 next year, is going to be at around 900,000 barrels per day. So that's a lot of volume. And that's why we think that if OPEC Plus continues to increase production after July, then certainly we'll be in a much more bearish environment, and we should see prices decrease a lot more. If we stay on OPEC Plus, but we move away from the 8 countries that are taking those decisions, if we look at the level of Iranian oil exports specifically, and looking at the volumes of these arrivals into China, so the volumes of exports from Iran have started to decrease on the back of more sanctions from the US between late March and 2-3 weeks ago, with 4 teapots directly being sanctioned by OFAC. Now, the exports have remained relatively strong, even though they have been decreasing. They have fell to around 1.4 to 1.45 million barrels per day, down from 1.6. But if you look at the level of arrivals of imports, so the oil that is discharging into Chinese ports, this has been coming down a lot more significantly, and that's what you can see on the top left. The volumes have been falling to, even so far in May, our view is that the imports have dropped to under 1 million barrels per day, indicating how the supply chain has become a lot more challenging for Iran to be able to discharge its oil into China. That is obviously being reflected in the floating storage situation, which you can see on the top right, with floating storage from Iran rising to above 30 million barrels so far. And that means that OPEC plus China, will go for other barrels, non-sanctioned barrels. We've even seen imports from Russia slightly on the way down as well. And as you can see, the utilization level is really much higher at the state-owned refineries than at the teapots. So that means that we should be seeing buying activity, nevertheless, from Chinese buyers for Middle Eastern crude that is not sanctioned, and that should be also supporting the price action in the next 2 months, I would say. So as summer season comes, the OPEC Plus decision to continue increasing production is again not that bearish. The other place where we think we will be losing barrels is Venezuela. And I'm sure you will all have followed the termination of Chevron's previous waiver to operate in the country. So Chevron actually has received a new waiver, which is much more limited. It allows the company to keep its assets in the country, but they're not able to operate, and they're also not able to import Venezuelan oil into the US. So we think that this is going to have an impact on Venezuelan production, despite levels of naphtha inventories, which are enough for about 3 or 4 months in terms of upstream operations, because as you know, Venezuela needs to dilute its extra heavy oil with either naphtha or condensate. Sometimes they even do it with gasoline. But despite this, we think that the technical know-how and all the other difficulties that PDVSA has means that we should be experiencing a significant drop in the production from the country. And so we believe that production will drop by about 160 KBD between now and October. So it will more or less stabilize around 730,000 barrels per day. But this is going to have a big impact on the US Gulf Coast because the US Gulf Coast was a major importer of Venezuelan crude. You can see on the right charts in red, volumes of Venezuelan crude used to be on average around 150,000 barrels per day. That started to drop over the past 2 months as US Gulf Coast refiners started to ready themselves for the end of that waiver. And it's very likely that for the month of June, we will not see any imports of Venezuelan crude. So that 10% that Venezuelan crude was making up in terms of total imports of seaborne crude into the U.S. Gulf Coast will have to come from somewhere else. And because Venezuelan crude is heavy and sour, that is going to be supportive for alternative grades, or potentially we could see the US Gulf Coast turn to more barrels from the Middle East, such as Arab Light or Basra Medium as well. That brings me to the US, and we have actually, since our latest update, we have revised down our view for US production, because as we have also revised down our view for prices, we'll see that on the next slide, which is the last one. That obviously will impact US production. So the OPEC Plus decision to continue increase production is, even though it's not bearish in the short term, it is going to be keeping a lead on prices over the longer term. And that is going to be impacting US production growth. So we have revised down our production forecast for the US quite significantly, as you can see on the left. We think that we would be in a situation where shale oil production from the US will peak this year at around 13.3, 13.4 million barrels per day. And you can see that next year, the average that we see, it's a drop of about 200 KBD, more or less. But I think that we could be in a situation where if prices stay low enough, we would have to even revise that further down. But that said, you can see that the drop really starts from the beginning of the fourth quarter this year, because it takes time, obviously, for the impact from the upstream sector on the US to actually impact production. So there is a lag of about 3 months to 6 months. And so we think that this is when we'll start seeing the first impact on US production. Just to highlight that obviously this will potentially impact the volumes of WTI available for exports. And so we could be in a situation where the Brent WTI spread would continue to narrow in the longer run. And so this brings me to our last slide, which is overlooking our price forecast. And if you can see if you look at the left chart, which shows you our crude and condensate balances, you can see that the red dotted line, which shows 2025, is much longer compared to 2024, and it is also much longer than the net length is much higher than what we used to have. Because of OPEC Plus production increases, but also because of demand losses and margins not being high enough to incentivize runs globally. And so based on this, we believe that prices will be dropping relatively significantly in the second half of this year. So you can see that in the middle chart, you have our view for dated Brent, our previous view in orange, and our new view in blue, in dark blue. And we were previously believing that Brent would be more or less dropping to around, $60, $63 per barrel, more or less where we are right now. But as you can see now, we believe that we would be in a situation where prices will need to significantly drop more, unless OPEC Plus takes a more significant action and decides to do more cuts or to completely freeze its production hikes for a month. But otherwise, we think that despite the fact that we would be losing barrels from Iran and from Venezuela, we would be in a situation where prices would probably drop to around $53, $55 per barrel dated Brent over the next, I would say, 9 months, 12 months or so. So that is taking me to the end of the presentation, and I suggest we open the floor for the Q&A section. So I guess we have about 15 minutes left on our schedule.
Yeah, that's right.
Amina,
15
do you
minutes,
want
and
to?
we have a number of questions here.
Yep.
Let me start off by saying that yes, this session will be recorded and you can view it later. A lot of questions, Hamayoun, just around the future policy and what we're basing our August assumptions on. Basically, we're looking at our balances, and when we say we assumed a pause for August, we are basically looking at our supply demand balances. But what OPEC has, I mean, the Secretariat works with a completely different set of numbers, and policy sometimes differs from our own balances at Kpler. I can tell you for the time being, there isn't any kind of discussion or talk around the possibility of a possible, pause or further cut. It seems that the group is very eager to continue the unwinding path, getting rid of that 2.2 million barrel per day voluntary cut. It doesn't mean that, we're going to see the increments at the same pace. And to be completely transparent with you, these decisions are really made maybe a day or on the day of the actual meeting. The countries constantly adjust their views. We're currently still facing a very, very volatile environment, and some of these, decisions are really a shot in the dark when you come to think of it. So even like anticipating what might happen, we just need to look at our balances, and we will be reviewing the situation over the coming kind of couple of weeks, and we might issue a update to our position, which you will see as part of our insights product. Hamayoun, I have a question for you with regards to our assumption on prices. Why are we thinking that prices will dip into the kind of $50 barrel per day zone?
Yeah, so it's mainly a reflection of our balances, which you can see here on the left. If you look at what happens after the month of July, we'll have in August we'll have demand globally dropping because we'll be reaching the end of summer season. So physical demand will be a lot lower, will be a lot less compared to where we are now. We'll have a lot more refineries going back into maintenance by September, October. And this comes at a time as well when you have non-OPEC plus production continuing to increase quite significantly at that time. So, Brazil, for example, recently launched 2 new FPSOs, Mero 3, Mero 4. And by the time that these FPSOs ramp up their production, we will be reaching their capacity. Each of them has a 180 kbd capacity and probably will be reached by September, October. At the same time, you have the new FPSO as well from Guyana, and there's another 2 FPSOs supposed to come online as well from Brazil this year. So in total, just the new projects that haven't started yet, it's another 600 kbd from just Brazil and Guyana that will be added into the market by, again, September, October. So really the balances are really too long at that time of the year, September, October. And if we have OPEC plus production as strong as it is supposed to be, something will have to give. And we believe that means that prices would probably be dropping. And again, the view we have is that this assumes that OPEC plus production does not increase much after July. So we actually assume in those numbers, we assume a freeze of the production hikes. So imagine if they go ahead, then obviously our prices would be even more bearish for that second half of the year.
I don't think anybody's going to be jumping up and down, Hamayoun, if prices fall to $30, $40. That's not in anyone's interest, and absolutely not in any of the producers or the IOCs or the entire upstream sector's interest to have prices drop to 30, 40, even, I mean, talking about $50, that's still, a low price. And we've heard, I was in the US even recently and hearing from producers there in Houston, their concern about oil prices and them seeing shale production dip at current levels. So, I mean, that goes against the whole objective of drill, baby, drill. There will be no drilling if prices fall to that level. So I got a question, Hamayoun, here around baselines. I'm happy to address that. So basically, during the OPEC Plus meeting, the issue of baselines was brought up again, the restructuring of baselines. As you're all aware, that many countries are unable right now to meet their production quotas because they've had a change in their capacities. So there's a need from OPEC Plus to revamp this entire system and work with a reference point that is fair to all producers and base that off of a new set of baselines. So during that meeting, they basically agreed to come up with a new mechanism that would structure these baselines, and they would only be introduced in 2027. So what will happen now is that the Secretariat is going to form this mechanism. They're going to be listing a number of companies that are going to be reviewing the capacities of all the 23 states. Plus, they're going to be defining what is maximum sustained capacity, because there's different definitions in different countries, and you have to reach a certain point and sustain your production for a period of 90 days and so on. So they need to put that definition down. So the Secretariat is going to be working on that. It's going to be presenting this mechanism in July. And then there's going to be a kind of informal talk with all the concerned members and the Secretariat in September. And then during the November meeting, they're going to be discussing and finalizing this mechanism. It takes a really long time. The issue of baselines, as you know, Hamayoun, has been a very sensitive one. We've even seen some OPEC members walk out of the group because of some disagreements over baselines. So it needs to be addressed early, and that's why they're taking all these steps to making sure that it's done properly and everybody is on board. So that's with regards to baselines. Okay.
I mean, there's a question on Russia. I mean, maybe I can go back to that slide because we were showing a
Sure.
big increase in Russian production in October. And so this is actually, so there's a question, there are a few questions about why that big increase from Russia in October. So this is just to give the fast answer. This is basically based on the compensation plans that the latest, at least, compensation plans that we know these countries have offered, and the compensation plan for Russia ends in October. And so that's why, on paper at least, Russia should be able to increase production a lot significantly, in October. But Amina, maybe you want to say a few more words on the compensation plans
Yeah,
and where
sure.
we
No,
are
I
with
mean,
it.
in terms of the compensation, there's an updated schedule, but it hasn't been published by the OPEC Secretariat. The idea is that a lot of these countries that need to compensate these cuts are now going to be accelerating some of the cuts. I was actually on a call just now with an official from Iraq, and they mentioned that they're going to be accelerating their cuts, meaning that they won't be adding the barrels, even though they have a higher quota. It gives them a kind of more flexibility to catch up on all these compensation cuts, making it easier for them. Just to take Iraq as an example, because Iraq by volume is the biggest overproducer. So for the month of May, for example, we're talking about only crude-only exports. They managed to drop their exports to 3.161. These are the official numbers. That's compared to 3.255. So they said that this trend is going to continue into the summer, and yeah, I think we should expect the same from the other players. Sorry, Humayun, you're on mute.
Sorry. Thank you. By the way, I was asking, do you believe, there's another question, do you believe that Kazakhstan will continue producing at these strong levels that they have been?
Ooh, okay. A great question. Well, short answer, yes. Yeah, I don't see, I mean, unless they lay out some elaborate plan that they plan to, cut from or communicate even to the IOCs, to the operators there about cutting. And just, I mean, through asking some of these IOCs and senior executives there, it's clear that Kazakhstan hasn't even asked them to cut production. And back in 2020, if we look at the big cuts that OPEC had, Kazakhstan did approach the IOCs at the time, and they did ask them to cut production. So I mean, there is a precedent there of doing this. This is not new, but they are not contacting them by choice. So until they do that, I mean, my quick answer to your question is yes, I do expect an overproduction from them.
Yeah, I think that's fair to assume that. Do you know at what point will Saudi Arabia consider that the kind of price dump was a success, and would they retighten production levels to get back to the price levels closer to their break-even state budget? Just in short, what's the kind of red alarm for Saudis when it comes to prices?
There are always these theories about red lines. What is the red line for them? I mean, if you look at break evens, Hamayun, we are way far, I mean, away from $91 Brent. I mean, we are way below that line. So defining what the red line is, and I already said, I mean, I don't think for anyone, and these are not red lines, but just generally, 30, 40, these are all alarming levels for everyone. And I don't think anyone wants to see that level of prices. And Saudi have a long history and know very well that the strategy of controlling or taming the price or going after a certain price band, that always fails. So that's why, I mean, they are currently, rolling with the punches in a way. We've seen, I mean, prices have been divorced from fundamentals. One tweet from Trump is more impactful than, theoretically, if we say a pause from OPEC now. Do you think a pause from OPEC would really hold the price or, attain $80 oil? I don't think so. But one tweet from Trump, entering, like having everybody worry about demand and imposing more tariffs and so on, that's more impactful on markets. So I would say that they will continue to adapt to the very volatile situation.
Yeah, that's fair. Although I think you mentioned earlier $50 per barrel, probably at least for the US, starting to be a zone where even for the Trump administration, it's not that great, right?
No, it's not great. I mean, I think the US just need to decide, right? They need to decide what the object. Trump wants $50, but he wants to drill, baby, drill. So he needs to tell us like which one he wants. So that's a starting point there.
Great, thanks. So there's a question on Iran. What is your view on Iran? Could an accord disrupt markets? I can take it unless you wanted,
Sure,
Amina.
yeah, go ahead.
But yeah, I mean, on Iran, of course, an accord could disrupt markets. It would mean that exports would at least stay, at the very least, stay at the levels that they were at the beginning of the year, so around 1.6 million barrels per day on average. They even, at some month, I think in March, or was it February, they reached a high of 1.8 million barrels per day. But 1.6 would be the minimum if there's an accord, if there's a deal. I think there is a slight room for an increase in Iranian production, but not much in the short term, due to upstream, I would say, limitations that they've had with the decline rate starting to impact production capacity for crude. So I would expect them to be able to increase production by another 100 to 200 KBD really in the short term. But for more, they would need a lot more time and investment in the country. But our view is actually that we still hold the view that we should be seeing a disruption in terms of supply from Iran. We're starting to see that As I mentioned during the presentation, volumes discharging into China have been dropping significantly. They used to be at 1.6 million barrels per day at the beginning of the year, and they're now closer to 1.2 to 1.3 on average. This last month in May, actually, they dropped under 1 million barrels per day. And the floating storage situation also explains why, we are seeing a lot more barrels stored offshore waiting to be discharged. So our view is still that we lose another 500 KBD from Iran, from the baseline that they were at the beginning of the year. But this is included in our balances, and despite that, we still believe that that prices will end up lower, even if we lose barrels from Iran. So if we don't, of course, it's even worse for prices.
Okay, I think we just have time for one last question. I'll partly answer it and then hand it over to you, Hamayoun, and you can kind of say goodbye to everyone today. Basically, why are we accounting for the summer demand that's within the Gulf states, which is already kind of embedded in the overall global demand? Why are we stressing the demand from the Gulf states? And my partial answer to that is that because we are probably going to, or a lot of these Gulf states, we're going to see a higher rate of crude burn this year compared to previous years. And part of that is because there is a need to buffer that additional production coming in. And for the numbers, Hamayoun, if you can just go through our estimates for what this demand is going to look like.
Yeah, again, I mean, you look at Middle East plus Russia, it's gonna rise. It's gonna rise by 1 million barrels per day. So it's more or less close to what the increase is going to look like between April and July. That's what we can see on the right chart. But I mean, despite this, the supply increase should still be slightly higher. So we should still be able to see exports from the group rise, a little bit, but not much over the next 2 months. But again, so far we've actually seen exports from the group, but including the exempt countries like Iran and Venezuela drop. So most of that drop is explained by these countries. Even though again, for you look at Saudi Arabia, Russia, Kuwait, UAE, and so on. So far, exports have been relatively flat. So we should see an increase in exports, but not significantly in the next 2 months. And that's why, again, back to our price forecast, over the next 2 months, we think prices still have a bit more room to increase. We think Brent could go closer to $70 per barrel, probably around 68. But after the summer demand drops, not just in the Middle East, as was mentioned in the question, but everywhere, then of course the situation changes, and as there's no place to absorb these incremental barrels, we think prices will have to drop.
I love ending on a bullish note. Thank you very much for that, Hamayoun. Really
Sorry,
appreciate
I
it.
apologize.
And yeah, I want to thank everybody on the call today. As I mentioned, that this webinar is going to be recorded and it's going to be available on our Insights page. For all the questions we didn't answer, please feel free to reach out to our team and they will send them to us, and we're happy to get back to you. And thank you very much. Till the next one.
Thanks very much. Thanks, everyone. Bye-bye.